Wayne, thanks for joining me on the podcast. How are you today?
I'm doing great. Thanks so much for having me on.
Let's kick things off. For those in our audience that are just getting to know you for the first time, tell them a little bit about yourself and then give us a quick overview of Sure.
Yeah, I'm Wayne Slavin, co-founder and CEO of Sure, and been in technology as an entrepreneur for 20 years and done everything from consumer electronics to enterprise SaaS and security, cybersecurity, and most recently into payments and insurtech at Sure. And been doing that for about 10 years and having the most fun we've had yet.
One of the things I wanted to ask you, and I was excited to have you on, is in less today than they did years ago, but still there's a lot of people that have this mindset that insurance is clunky, outdated industry. As you were first starting this, what was the core problem you set out to solve? And really, how did you help those people interact with insurance?
Yeah, I think our core mission and vision over the past decade, even though the business has done an aircraft carrier style turn from what we originally started offering, which was a direct to consumer mobile app, which would allow a customer to buy any type of insurance product right when they needed it, right? So that was kind of the core focus was, hey, if I was on a plane flight and I felt like I wanted to buy insurance right before that trip, I should be able to do it. If I was just bought a pet home from, pet adoption and I just adopted my first dog, I should be able to buy pet insurance. Or I just got engaged and I just gave my fiance, an engagement ring, I should be able to buy jewelry insurance right now. And that would naturally follow somebody's life, and you'd add different types of insurance as you bought a car, bought a home, et cetera, et cetera, et cetera, and really consolidating that in one place. So that was always part of the vision. What ended up happening, though, is what we realized was what was missing was a lot of technology infrastructure to enable something like that to happen. It seems so obvious looking at fintech, and we'll talk about where those deviations come in between financial services and insurance. But where we ended up today is we're still trying to do that same thing, which is a frictionless insurance transaction right when you need it. The piece that changed was where you would do that transaction. Were you going to do that on the glass on your phone, or were you going to do that from a brand, whether that's the car company you're buying your car from, or the online mortgage company that you're refinancing your house with, or the neobank that you just opened up your first mobile banking account? Where are you going to do that insurance transaction? And so today, what Sure does is we provide the software infrastructure for big insurance companies to run truly an end-to-end insurance program. And the consumer brands, and we work with the Fortune 10, Fortune 500, Fortune 50, and a bunch of unicorns to enable them to have an embedded insurance transaction in their product. And so very much going to really this idea that Visa and MasterCard are the rails. They're not FIS and they're not Jack Henry, software providers for banks, and they're not the bank that, themselves. They're the rails to connect the two. That's really what Sure is doing today. And that never existed in insurance. And frankly, we're in a little bit of a category of one where we've had to build the tech for the insurance companies and the folks that are selling this new concept of embedded and white labeled insurance products.
I mean, I like businesses like that, though, because it's also for a good thing for you. It does make it like there's a lot of work that went into you building this. It makes it very hard for a lot of new companies to want to come into the fold and build that because to build for both sides, that's not an easy thing to do. I would like to kind of hear your thoughts. I'm not going to ask you the AI. I told you this already. I'm very excited about AI and how it's transforming industries, but I'm not going to ask you about that here today. I am going to ask you what kind of innovations and trends are you watching out for outside of AI in the space today?
Yeah. We can always do a follow-up on AI. I did my graduate studies in AI, and so I have some opinions there, but we'll save that for another discussion. The trends that I think we're seeing here are a few things that are combining. Firstly, you see the news, even if you're not interested in insurance, you see the news, wildfires, hurricanes, price increases, repair costs, all of these things that, we see the headline. What does it actually mean when it gets down to the impact to insurance costs? So there's clearly some change happening there. You see on the other end, big consumer brands, everybody from Apple to Amazon to Costco to, Chime, Revolut, Uber, Airbnb. You go down that list of consumer and B2B brands, and many of them are just trying to expand their ecosystem, right? They own an ecosystem of a customer, they've paid to acquire them, and now they want to go offer them a loan, a debit card, something else, and they have a core KPI and they want to go monetize them. So you've got kind of two ends of a network that are going through an evolution, right? Hey, we have the technology to offer all these additional services. Our customers want them. They don't need to leave my ecosystem. On the other end, I have all this pricing pressure. I have all these marketing costs. I have, staffing costs and efficiency that I need to gain on the insurance company side. And I covet, as an insurance company, loyal customers, customers that I have better data on, folks that don't churn every year, right? And so what we have is a couple of ingredients combined with a demographic shift that's happening. And we did a bunch of market research on this recently about consumer sentiment. So Gen Z, the younger generation, they are not going to want analog insurance. They've never had an option. So that hasn't happened. The industry never got there yet. It's really happening now, slowly, because it's insurance. But you've got a demographic change that's going to really be fundamental in the next 10 years. You've got big companies that frankly have billions of consumers and plenty of cash. They could go buy an insurance company if they wanted to. They want to control that customer. And then you got insurance companies that are looking for new ways to grow and acquire customers. It's not just Super Bowl ads anymore. So you combine all those three, and we are at a moment that, it sounds silly to say it, but it is an inflection point moment. It's just not going to be one moment in time. It's going to be a decade long. And so we see that, but we have something that most people gloss over, which is different from other financial services. So it could be lending, it could be payroll services, it could be checking accounts, it could be whatever. But fundamentally, banks are connected to each other. And we take that for granted, right? Banks send money to other banks. They are connected to the Fed and Treasury and SWIFT and ACH and all these other things because banks are by nature connected. Insurance companies are not. They operate like an island. If you have Allstate and I have Nationwide and, we switch, we didn't actually move our account. We stopped being a customer of one and started being the customer of another one. And so there's been this moat around an insurance company where they never were connected to the outside world. And so the trend that's happening is insurance is now starting to become truly an online transaction and a real-time transaction, not a transaction where you called your agent, they said you're good to go, but actually your payment came 21 days later because they sent you, a statement in the mail. That's now starting to change. We're driving some of that change at Sure, but that change has to happen so that this network of truly embedded and online insurance can mature, and we can get away from what I think was, in some people's eyes, the failure of InsurTech 1.0, which was guys with really big brains are going to go and disrupt guys with really big bank accounts, and they're going to do that really fast with technology. And that's kind of the direct-to-consumer InsurTechs that you're probably familiar with that did, home insurance and auto insurance and did small business insurance. They didn't quite get to scale. They built cool brands, but they didn't quite get to scale yet. Still losing money, many of them. And I put that in kind of InsurTech 1.0 and what we're doing in the 2.0 of somebody needed to build the Visa and MasterCard.
I think a lot of people, like a lot of consumers, first experience with having like this embedded insurance into their everyday life was it seemed like airlines and hotels always had that. It, they implemented like the fear, like if you can't make this flight, you're gonna have to pay this. But like when we look at just this continuing to evolve, you mentioned it a little bit, but I'd love to hear more. Like, what does it mean for the traditional insurance players that just chose like maybe not to fully embrace this new way of doing things? Like, is it too late for them? Like, do they still have a, or will we see them continue to make acquisitions to try to catch up because some of them waited too long?
Yeah, I mean, the benefit for the big insurers is that they're so big that they can afford to be slow to react, right? Because they're just so big and their customers don't go away immediately, right? Their customers hang around for 9 years, 20 years, and they tend to not make changes. But what we're seeing is, to your point of the airline example, you got the airline example, you got when you go to the Hertz rental car counter and they offer you rental car insurance, although that's kind of analog, it's still an embedded insurance transaction, but it has started to change. I mean, Apple Care, as an example, used to be offered to you after you bought your iPhone. And now it's offered to you at the same time on the same screen that you choose your iPhone model, right? You choose your model, your size, your memory, your color, how do you want to pay for it, and insurance before you even add it to cart. And so we're starting to see that that's evolving. But what is the kind of decision point that will flow through for insurance companies is the shift being, I don't really have affinity for my insurance company. I really have affinity as a consumer with the brands that I buy from. That's how I identify. I'm an Apple person, or I'm an Android person. I'm a Toyota driver, or I'm a Tesla driver. And nobody's walking around with a t-shirt that says Geico. I mean, maybe ironically, but like that's just not what consumers care about. They have affinity to the brand, not to the carrier. And there's a second step, which is Apple doesn't offer you 5 different options for Apple Care. They offer you Apple Care, yes or no. Same thing's true with United or Delta. They don't offer you 5 different options for travel insurance. They offer you one option. And that experience is what I believe will win, because that's just better for the consumer. And if we start from that perspective of the consumer wants to book their flight, the consumer wants to drive their car home, they want to close their mortgage, they want to start their new company, they want to do all those transactions that insurance is in the way. And if they're responsible and we make it easy enough, they'll buy it. That's what we got to do. That's the unlock for everybody.
And this isn't like when I think through too, it's like you were saying, okay, Apple now offers this to you at the same time of like purchase versus after. What's What's really interesting to me is how things will continue to progress in terms of like, hey, John, you broke your phone 4 times, like where it'll continue to go, right? Like we highly, highly recommend that you get this because then it's even building out the scenario, right? Like you start to see it all the time. Like here's your cost if you do break your phone, you have to get a new one. I do think in the past there's been like how a lot of insurance company it's been a fear type setup too. It's like you're gonna have to pay a lot of money if you don't get this insurance. But like when you look at, and this wasn't just related to AI, right? We could do this with machine learning, like in terms of matching stuff up, but I guess where I'm going with this is in a long way of asking. A lot of that information and leveraging that data is all about building. There has to be some trust there in order for you to be comfortable with that data happening. So, how how are you at Sure building trust in this era of automated and online transactions?
Yeah, we are doing a bunch of really cool stuff with one of the big credit card networks that offers insurance to all their customers. So you've got their card in your wallet, and there was a really interesting case study of, consumers had this insurance protection on all their purchases or all their travel, but the experience of submitting a claim and getting reimbursed was just so poor, 6 weeks on average to get it resolved. And it could be like a $5 claim. It could be a $100 claim. We're not talking rebuild a house. And it was just such a poor experience. And so we worked over the past 5 years with this credit card network to completely modernize that experience down from 6 weeks to an instant decision. Now, not everybody is an instant decision today, but that will change over time, right? To your point, if somebody's broken their phone 4 times, like maybe we need to have a conversation about, buying a case or, whatever it is. But for the majority of people who want to use that insurance that one time they need it, like that could potentially become a lot smoother and easier. And so we are actually doing that today, and that will happen more and more and more. But to your point about trust, let's think about who has the right to win that trust. Let's stick on your example of phone. Well, Apple, I'm going to hold my phone up here, right? We have this little magnet jobby that's really convenient accessory. But let's flip our viewpoint around for a second. When you put your case on your iPhone and it's got those magnets that they use for charging and all that other fun stuff, the phone knows you have a case on at that moment because the magnets are activated. And so what if instead of charging you $5 a month, if the phone knows Apple knows you've got a case on it, it's $1 less. Does that change your behavior? I don't know, but maybe. And so what we've been talking about with insurance and data and trust is like really been focused on things like your driving behavior and giving your telematics data, and that keeps your insurance rate at this. And if you don't do it, your rate's going to go up. But what about if everybody, instead of just saying, your rate is this if you give me your data, we actually said, no, because Apple knows and you bought it from Apple, they can do something different, which is they could say, by keeping 10 million people a year out of the store and in the Genius Bar, like that actually helps Apple. Cool. Maybe they would charge you $1 less if they knew your phone was on, with a case on it 24/7. And so I think that there's some awesome opportunities. That's what I get excited about. I'm sure you can hear it in my voice. That we just came up with that idea together on the spot. I mean, I don't know how often you do product development on the podcast, but
No, I love it. And then also though that it also, the more data you can have though, is there's probably some people, because I feel this way sometimes, I have the case on, I'm going to be more reckless with my phone.
Yeah, could be.
Right? Like, you'll laugh at this. I had a pile of laundry. I finished doing laundry one day, and I was frustrated. So I took my phone. I'm like, ugh, but I know I'm not gonna. I would never throw it off something. I'm gonna throw it in the pile of laundry. It's safe. I missed the pile of laundry, hit the carpet. It ricocheted off the carpet, smashed up against the wall, shattered. I had to get a new phone the next day. It was the most frustrating little thing where I just kind of did a little toss. So yeah, not a good example. And let's not use this recording of me to change my insurance in the future, right? That I hope we don't get to that.
Yeah. All hypothetical. That was your friend. That was your friend told you that story.
Friend told me that, exactly. I like that. Yeah. So no, I like that you did that though. I like having these product discussions. Honestly, we probably do it more, but not everyone, as you can imagine, wants to do. It's fun to do that type of stuff. I did want to ask you one or two more things before we wrap up here too. This is a highly regulated industry. Innovation's often slow. You're doing great things, but what are some of the biggest regulatory challenges that you've faced, and how did you get around them?
Yeah. Well, I think the answer is you don't go around them. You work within the constraints that you've got, and you focus on that. And I think what we just discussed right there of hey, here's two things that have never been combined, two ideas. And my experience is the folks that are in insurance companies that are responsible for their compliance and their customers and consumer protection, as well as the regulators that they work with, are pretty open to discussing new ideas. There are That I don't think has been where the challenge is. Now, there are folks that are much closer to, they run the insurance product and they're responsible for pricing. And, those are the articles we read about where, Florida home insurance and California wildfire insurance. But because of our business model where we are not the insurance company, that really hasn't had a big percentage impact on Sure's ability to innovate because of the way we've designed the business, not being the ones that are taking the risk. But I think it's just going to be gradual. And, there are things that I wish could go faster, but I'm also really empathetic to the hard job that an insurance regulator has to protect consumers and the job of an insurance company to get it all right and get it right always for every customer. And they do a pretty darn good job 99.9% of the time. Yeah, sometimes it doesn't go well or somebody has a complaint and that has to be dealt with. But I actually think that gets better with technology, right? Like if you're not getting a letter in the mail that says, hey, you didn't open this piece of mail. This is actually a notice of cancellation that I got on my policy, got mailed to me. I didn't do anything wrong. It was the insurance company left Texas. But if you didn't open that because you just were out of town for 7 days, like that's totally compliant. But like, should I also get that via email? Does it really matter if it's formatted perfectly? Maybe, maybe not, but like I should probably know. Should I get a text message and a piece of mail in the mail? Yeah, probably. And so I think people are pretty open to enhancing the customer experience while being cognizant of the constraints of the regulation. So hasn't had a big impact for us, but we also approach it, I think, pretty pragmatically and in a positive way.
I love it. Wayne, I want to thank you so much for coming on the podcast, sharing some thoughts with us. Hope to have you on again in the near future. Please keep us up to date with everything that's happening, but best of luck to you and the team, and congrats on everything you've built so far.
Thanks so much for having me on. This was fun.